You're looking to get the inside track on something important, to really understand what's going on without getting lost in, a mountain of data, right?
Yeah, absolutely.
That's what we're here for today. We're plunging into a truly ambitious and potentially revolutionary vision for Bitcoin.
Exactly. We've been looking at this recent CoinDesk article, and it details Michael Saylor's incredibly bold strategy. We're not talking small moves here.
No.
This is about a projected $200 trillion asset class, the whole idea of a U.S. Bitcoin strategic reserve, and even this concept he calls economic immortality. Pretty wild stuff.
Right. So our goal in this deep dive really is to pull out the key parts of this strategy from the article. We're going to look at the potential shifts it could bring, make sense of some of the more, eyebrow-raising aspects, and just keep things clear and focused for everyone listening. Okay, so let's dive in. $200 trillion for Bitcoin by 2045. What's the thinking behind that staggering number?
Well, his vision, it goes way beyond just price going up. He sees Bitcoin becoming like the fundamental settlement layer for the internet, especially in this AI-driven age that's coming.
Okay, the settlement layer.
Yeah. So this $200 trillion, that's his estimate for how big that whole digital asset class could become. But what's really crucial to his strategy is the belief that the U.S. government needs to set up a big Bitcoin strategic reserve.
Ah, that's the catalyst.
That's what he thinks is the catalyst, yeah.
Yeah.
That it will basically force global adoption, compel other nations to jump in.
To put that number, $200 trillion, in perspective, that's like roughly the entire global GDP right now, isn't it?
Pretty much, yeah. It really highlights the sheer scale of his ambition. And, it naturally makes you ask, is that even plausible?
Right. So it's a forecast,
Mm-hmm.
but it's deeply tied to a specific action. And strategy folks might remember them as MicroStrategy, that they were right at the heart of trying to make this happen. Their Bitcoin stash is huge.
Yeah. Oh, it's massive. I mean, the fact they even changed their name from MicroStrategy to Strategy really hammers home this pivot. They've piled up over 500,000 Bitcoins.
500,000.
Yeah. But what's really interesting is how they did it. They've leveraged something like $33 billion through pretty sophisticated financial tools, things like convertible bonds, preferred stock. It makes you wonder if this isn't just about stacking sats, but about actively, shaping Bitcoin's future.
It almost sounds like they're trying to engineer a kind of perpetual motion machine for Bitcoin's price. The article mentioned this idea of a self-sustaining cycle. How's that supposed to work?
Precisely. And Saylor himself has apparently called it financial engineering. The basic idea is, look, they raise capital through these bonds and shares to buy more Bitcoin. That buying puts upward pressure on the price. Then, as Bitcoin's value goes up, it makes their own company's stock, MSTR, look more attractive.
Right, so MSTR goes up.
Exactly. And increased demand for MSTR, plus their other products, the equity, options, bonds, preferred shares, lets them raise more capital.
To buy more Bitcoin. And around it goes.
Around it goes. And we've already seen a huge jump in their market cap, right? It hit $100 billion. They've gotten into the NASDAQ 100, and now they're apparently aiming for the S&P 500.
Okay, now here's where it gets really intriguing for the bigger picture, this whole concept of a U.S. Bitcoin strategic reserve. It feels like the U.S. stance on crypto has really shifted, hasn't it?
It really seems like it has. The article points to a pretty significant change in U.S. policy. We seem to be moving away from what some called Operation Choke Point 2.0.
Right, that sort of indirect pressure on banks serving crypto firms.
Yeah, that kind of thing. Moving away from that towards, a stated goal of becoming a Bitcoin superpower. President Trump's executive order to establish a U.S. Bitcoin strategic reserve is a major signal of this shift.
And that order specifically said don't sell existing holdings.
Exactly. It told the Treasury not to sell any current Bitcoin and to figure out budget-neutral ways to get more, plus how to manage crypto assets they might seize.
And Saylor's not just watching from the sidelines here. He's actively pushing some pretty big ideas, isn't he?
Absolutely. At that White House Digital Assets Summit, he actually proposed the U.S. should aim to acquire, get this, somewhere between 5% and 25% of the total Bitcoin supply.
Wow, 5 to 25%.
Yeah, by 2035. And his projection is that doing this could generate something like $100 trillion in economic value by 2045.
That's huge.
It is. And interestingly, Bo Hines, who's the executive director of the Presidential Council of Advisors for Digital Assets, apparently even suggested the administration wants to acquire as much Bitcoin as we can possibly get.
So real ambition there.
Seems like it. And you also have Senator Lummis suggesting using Fed earnings, even gold certificates, to buy Bitcoin. It shows this is being seriously talked about at very high levels.
Okay, so the idea is the U.S. government jumps into the Bitcoin pool in a big way, and Saylor's bet is that this forces other countries to follow.
That's precisely his argument. If the U.S. government makes a major Bitcoin play, it essentially forces allies to treat it as a global capital asset too. And eventually, he thinks, even adversaries will have to fall in line. It becomes a fait accompli.
A done deal.
Yeah. So it's as much a geopolitical play as a financial one, in his view.
But, okay, all this financial engineering, this aggressive buying by strategy, it does make you wonder about the risks, doesn't it? What are the potential downsides for strategy?
That's a really crucial point. Look, while they've been incredibly successful at raising capital, that $33 billion figure is huge to buy all this Bitcoin, there are definitely risks.
Like what?
Well, the article highlights that their actual software business profits were pretty minimal between 2020 and 2023.
Right.
So that raises a big question. How do they actually pay the dividends on preferred stock? Or meet the obligations on these bonds if the market tanks, or if, they suddenly can't raise fresh capital as easily.
Is there a specific deadline looming?
There is. There's a key put date coming up in September 2027 for a $1.8 billion loan.
A put date, meaning?
Basically, it's a point where the lenders can say, okay, pay us back now. And that could put strategy under serious pressure if they don't have the cash or can't refinance easily at that moment.
So even though they talk about an indestructible balance sheet, a big drop in Bitcoin's price or just tighter credit markets could really squeeze them, potentially force them to sell Bitcoin or even default.
Well, they do stress that they haven't pledged any Bitcoin as collateral for loans, which does remove the risk of a margin call, which is significant.
Okay, that's important.
But their model does rely heavily on being able to constantly tap the capital markets. And looking at their new STRF perpetual offering, it has a higher coupon rate, like 10% versus 8% on the original STRK, and no common share conversion this time. That might suggest it's getting a bit more expensive for them to raise money.
In the fine print.
Yeah, the prospectuses for these things apparently state pretty clearly there's no obligation to pay accumulated dividends. So that's another layer of risk for investors to weigh.
Okay, definitely some complex financial waters there and real risks to consider. Now let's shift gears slightly to this really fascinating idea Saylor has talked about. Economic immortality. That sounds profound.
It really does. Saylor has stated quite clearly that neither strategy nor, he believes, the U.S. government will ever sell their Bitcoin. He seems to have this deep conviction in Bitcoin's core principles: sovereignty, sound money, freedom, property rights.
Yeah.
But this economic immortality idea, it takes his commitment somewhere else entirely. He's really talked publicly about maybe burning his personal Bitcoin holdings before he dies.
Burning them, like destroying the private keys.
Essentially, yes, making them permanently inaccessible. He frames it as a kind of ethically proper, ethically sound charity.
How is destroying value charity?
His logic is that by permanently removing those coins from circulation, he'd increase the scarcity of all the remaining Bitcoin. So in theory, it would increase the value for everyone else in the network. He'd be enriching the entire ecosystem.
Huh. So it's not about leaving wealth to heirs in the traditional sense. It's about contributing back to the network itself in this, well, pretty radical way.
Exactly. He sees it as going beyond just passing down money. It's about strengthening the fundamental value proposition of Bitcoin itself long term and, cementing his legacy within that community.
To really grasp that level of conviction, it probably has to look at his background a bit, doesn't it?
Yeah.
You mentioned MIT earlier, technical degrees, then the whole dot-com boom and bust, the accounting scandal at MicroStrategy back in 2000. It's quite a story.
It really is quite a journey. Those MIT degrees, aeronautics, astronautics, history of science, they probably shape how he sees Bitcoin's design. He often calls it thermodynamically sound.
Right.
He co-founded MicroStrategy way back in 1989, rode the internet wave up, then faced that massive setback with the accounting scandal. But what's really striking, as the article points out, is the irony that his biggest success now, maybe ever.
With Bitcoin.
Yeah, with Bitcoin. It came from Satoshi Nakamoto's idea, something he apparently stumbled upon almost by chance during the COVID lockdowns.
So it wasn't initially this grand world-changing strategy for him. It started as something more practical for MicroStrategy.
That seems to be the case. Initially, it looked more like a potential hedge for their corporate treasury, maybe even a bit of a desperate measure given their situation at the time.
Hmm.
But obviously, as they bought more, as they saw Bitcoin perform, it evolved. It went from just being an opportunity to becoming the absolute core, the defining strategy for the company, now called strategy.
Okay, so let's try and bring it all together then. We've covered Saylor's huge $200 trillion vision for Bitcoin by 2045. We've looked at how Strategy, his company, has used some pretty complex financial engineering to accumulate a massive amount of Bitcoin.
Right.
We talked about the potential game changer of a U.S. Bitcoin strategic reserve, the financial intricacies, and, frankly, the risks involved in Strategy's approach.
Yeah, definitely risks there.
And finally, this really unique idea of economic immortality. It's been quite a deep dive into some big concepts.
It really has. And I think maybe the key things to take away are, one, just the sheer scale of Saylor's long-term ambition. Two, how tightly Strategy's financial moves are linked to Bitcoin's price, that feedback loop we discussed.
Yeah.
And three, the potential geopolitical shockwaves if the U.S. really does go all in on a Bitcoin strategy for the future. Those feel like the big aha moments.
Absolutely. This has been fascinating to unpack. Thanks for joining us on this deep dive today. We really hope this gave everyone a clear grasp of Saylor's vision and Strategy's bold plays without, drowning in jargon.
My pleasure. And maybe it leaves you, the listener, with some food for thought. Considering Saylor's vision and Strategy's relentless buying, what do you think are the biggest opportunities and maybe the biggest dangers for individuals and for the whole global financial system if Bitcoin adoption really takes off like he predicts? And what does economic immortality actually mean in this digital age we're living in? Definitely something to chew on.